How would a company get shaken out of a market? Literally just the same. Like if a company's making an investment in something, like how do you get shaken out of the market if you're, ExxonMobil, for example? What are you investing in that you get shaken out of?
Well, in the case of a corporation, it would be that their portfolio, they become so bloated, crude oil's at $40 and they can't make money. So they start selling large swaths of assets to the marketplace. They start literally dumping their book, right? Intel's doing that right now. Intel has just hired 2 investment bankers to tell us, hey, you investment bankers, tell us what we can hold on to and what we should sell. That's a corporate. This term that you're using is normally referred to with markets where traded markets are pushing the guy out. Either you have leverage, margin call, or their VAR, their value at risk, exceeds their risk management's team, the risk management's compliance policy, right? So they may say, hey, we have a value of risk of $300 million. And any day, if the portfolio moves more than $300 million, y'all have to do something. You have to liquidate. You cannot have your particular book. Let's say I'm trading Morgan Stanley's book. They will give me a value at risk. Gary has a $3 billion value at risk. Sam has a $30 million value at risk because he's less professional. He hasn't been around. He doesn't have the veteran, right? You don't have the clout that maybe I did. So I get a bigger
Those are the
bar.
Parameters, the 30 million or the 3, those are parameters in which I can have a drop.
Yeah, but my point is that I'm working at Morgan Stanley. You're working at Morgan Stanley. I have a $3 billion bar. You have a $30 million bar. You might be working for me. Okay. And underneath me, oh yeah, Sam's got 30. Mary's got 300. And Bob over there, he's got 2 billion. But I'm overseeing all of it. You crush your number. You turn 30 into 300. Okay. Guess what? You're going to sell your position. Okay. You see what just happened? See, the value of risk over the whole portfolio got screwed up because of the $2 billion guy had so much volume. He stripped out your 10X, but because your 10X was such a good trade, it's the first thing that goes, dude. It's the only thing you can sell. So, that's what you have to think about is like, oh, this great company's getting sold. Yeah, dude, because it's the only thing you can sell at that point. Right. So, and this is how liquidations occur.
Am I being punished because of Bob's $1 billion loss?
No, you're not being punished. You're in a club and the club's got to make some decisions. Do you sell the $1 billion loss on the commodity that's really not going anywhere because you took $1 billion loss, dude? Okay. No. Hey, sell Sam's position. Now, Sam, you did well, but now you got to start over because your position's gone. You got to go do another 10Xer. Now you have $30 million of VAR. Guess what? You're going to be like, okay, let me go put that VAR to work. Because you're not getting commissions unless your VAR is being exercised, right? It's like going to the gym every day. Okay, I'm going to lift 200. I'm going to lift 200 today. You don't go to the gym, you got to keep going to the gym. You want the money to be working. You don't want it sitting on the sideline decaying because somebody will take it. I'll be like, hey, boss, Sam's not using the money. I'll take his 30 million, dude. Okay. I want Sam's 30 million. I can turn it into 22 right now. Add 22. Not, I can. Yeah. By the way, if anybody ever wants to know how to take 30 million and turn it into 22, I am your man. And I don't charge much for it either. I do just a 1 in 10.
Interesting. So VAR is really almost a company term because Gary Cardone doesn't have a VAR per se, right? Like that's kind of your own emotional risk or your own barriers of what you want. But Gary Cardone doesn't have a VAR.
Yeah, it's a risk management term. I mean, I do have a VAR, but it's not something that I do have value at risk. Today I had an $80,000 move on one stock. So my value that's at risk probably increased a bit. But yeah, for the main part, this is a risk management tool where the board or risk manager can go, hey, look, we're within our operating boundaries. Nobody's going to blow a hole in the ship.
Swami says maybe buy clean spark puts if it drops hard cash in the puts and keep the long stock. Just a thought. What exactly is he saying there?
Yeah, see, I mean, those guys are smarter than I am, but I would not buy put after the price has just moved 20%. Seems like that would be very expensive at this point. And although if he's saying the call option's expensive, then I got to believe the put is very expensive here. But I haven't looked at it really. I haven't looked at the values or the pricing on those options. Yeah, he may be right though. They may both be, and they're very thinly traded markets. Those options on those mining companies are very thinly traded.
Could you give me an example of when you were shaken out of the market? Or maybe even someone close to you who you saw?
No, listen, dude, I was in a position in 1995. No, it's probably 97. I was short. I was short about 800 billion cubic feet a day in the UK, and everyone figured it out. And I couldn't get out. So this was not just, what's the term you're using?
Shaken out of the market.
Shaken out. This wasn't getting shaken out.
That almost sounds like you were being targeted.
Well, the shakeout was so aggressive, I couldn't get out. Literally, the position was so large. Remember I said, hey, it's either about duration or time. Well, one, I'm a public company. So I have every 90 days, I'm having to report earnings. There's only so much you can do. In your VAR, in the big picture, there's only so much you can do. And a corporation, when you start losing, oh, wow, I'm going to lose $100 million on this position. That's $10 million a month, dude. Okay, like that's a lot of money. Also, what happens if your main corporation also is losing money and they're on quarterly earnings? So people start looking around going, okay, which one are we going to cut? The pain was so bad, my guys were like, hey, look, let's double up the position or triple it. Meaning, we like Gary. We think Gary's right most of the time. Maybe it's just the problem with the timing. Let's double it up. I'm like, no chance, dude. We're not doubling anything up. I'm getting out of this position. Once I got out of it, the market calmed down, but it really needed me to get liquidated. That's what it was, really a liquidation event for me. Because I couldn't get out. There was just not enough volume to get out in these very thinly traded early stage markets. My position was just too large relative to the market to get it out. So not only did I get punked out, but I got pushed out really. But like they didn't do anything wrong. And when you say they were targeting me, you have never heard me complain about somebody targeting me when I'm weak. What I bitch about is when the government agencies target, or Visa, MasterCard target small players, and they take advantage of small players because they know they can't deal with the legal issues or the cost to play the game. So that's like, they did no Shell, ExxonMobil, British Gas, Centrica, BP, Mobil. Dude, they did target me. they knew I was running around naked all over the streets of London, and they basically put the light on me. I mean, that's the market. That nobody did anything wrong.
It's just how it works.
But if you start, using your dominant position to put me in my place, that's uncool. I made a mistake. I got slaughtered. Now, with the good news of that, the sooner you correct that position, this is a huge mistake people make. For instance, you're sitting here looking at my CleanSpark thing going, he's not even worried about it, man. Just the way he's answering the questions, like, oh, whatever. But let's say that was a problem. Dude, I need to rip that position off. Okay, just close it and move on. The reason I share that is this big position I was in the 90s that caused me, I wasted 9 months. Okay, this position's so large, I'm literally going, oh my God, I can't even get anything else done, dude. I drive to the office in the morning at 5, thinking about this position, and I drive home at 7, thinking about the position and how to get out of it. As soon as I closed the position, the moment I closed it, it was like the sun had risen in the east. Morning is here. Cat Stevens playing in the background. Somebody's got me a beautiful cup of coffee. A beautiful, woman's bringing me a cup of coffee in her beautiful negligee robe, right? It's just on a Sardinia coastline. I mean, it was like that, dude. I made $2.5 billion right after that, dude. It was unbelievable. As soon as I wiped out my position, it wasn't quite $2.5 billion, but I mean, the pivot was so awesome.